Hi guys, hello. How's everyone? Another week starting. Very good week for us. I hope everyone had a good weekend. Last week was a very nice webinar. We had plenty of good opportunities on the market. Just gonna wait maybe 2 more minutes and we should start it. Because I know a few people will come. So yeah, just waiting for that. Then we're good to start.
Had a beautiful day here in Sydney. Very hot though, but you know, very, very good. I was running a marathon this Sunday. So I just done my recovery run today. Just an easy 4K run. I don't know if you guys are into running, but yeah, it's pretty good. And you know, as we are waiting for everyone, I'm just going to talk a few things about mindset. But you know, running is, I find that it's very important for me, especially because it gives you the patience and the discipline towards, you know, keep running. It's hard. Yes, it is hard. Oh, Steve, how are you, Steve? How are you, Tal? Yassi, everyone here again. That's awesome. It's, you know, running, it gives you the discipline. Like, oh, I don't want to run. It's not comfortable to run 4K, 10K, 20K. I definitely don't like to run, but it's something that I know that if I keep going and doing it, it doesn't matter when, where, if it's rainy, if it's sunny. Like I was running on 33, 34 degrees today and I was sweating like a pig, but you know, it is what it is. It's the discipline, the same as like trading. The discipline towards trading is the best thing you can have. I'm not saying for you guys to take 100 positions. That's not what I mean. Discipline comes, yeah, that could be it. Like your one can be the gym, my one is running. Like everyone has, I would say definitely, guys, practice some sport. Definitely get your blood to flow, you know, to fly towards your, like your body's an engine, so always, you know, try to keep it running. That would be my take. Maybe I would have to check with my team if I can do that, but probably can. But anyways, what do you guys think about I do like a, let's say maybe, because it's, you know, I always try to do in 1 hour. So always try to keep it in 1 hour, so then we can go over all the pairs and can have everyone like answering the questions and all of the things you guys already know. Going back from last week, what I've looked at and so on. But what do you guys think about I do like a little macroeconomics course, like about like not only like, because my trading system, it's very simple in a way. It's like we go for the fundamentals first, we analyze, yeah, fundamentals, yeah, in a more professional way would be macroeconomics, microeconomics, and so on. So that would be the more professional approach to trading, right? So why did this move happen? You know, why that AUD lost in strength and CAD gain in strength? Why USD at the moment is, you know, why I'm longing Usdjpy at the moment. It's not because it's a support, right? There must be a reason why this move happened up, right? There must be a story behind it. So it's not only like, oh, okay, because I don't know if you guys know, but I was a hedge fund trader. So I think a few you guys know. I can't say which fund I was trading for, but yeah, I was a hedge fund trader, and like price action was the last thing that we looked at. So price action is actually the like last thing on the trading system. It's when you're gonna see, oh, okay, there is a resistance here, there is a support there, Fibonacci levels, and that's it. You can see that my charts doesn't have any lines, you know, because I don't quite need it. It's very obvious that there is a support here. The price comes and touch it, right? So breaks it down, comes retest it. So there was a consolidation here that I've mentioned on that video for you guys. So this one here that I've told you guys last week to watch it, because it was pretty interesting. So you can have a understanding of how to positioning yourself on the market, like waiting for a consolidation and then, you know, placing your orders. Let me find it here again and send it, because there is a few. Just guys, we're just going to start now. All right. So just send me, let me show you the video again. There are new name here. There are new people here, so very nice to see everyone. Is it this one? No, not this one. I can't find it now, unfortunately. But anyways, you guys know which one I'm talking about. Yeah, anyways, let's start it. Let's not lost time. Yeah, so okay, I'm gonna talk to my team and then I'm gonna see what they think. And so having you guys wanted these, so I'm going to take a screenshot with the permission of everyone here on the chat, so I can show to them, and then I can introduce these, you know, maybe a new webinar or something like that. So I can actually do literally like class by class. What is GDP? How does the growth domestic product impact on a country, and how does you know, and how these can be used into forex? Why does the central bank raises interest rates? What is hawkish? What is dovish? Why there's all of those things happening, and how can we build it up a trading system towards those fundamentals so we can use it on our favor? Because coming here and talking to you guys about my analysis are good. I really like to do these. I'm not saying that I don't like to do, but I want you guys to be able to do those types of analysis, you know. So that would be like my top end goal, and I would be very, very happy to see you guys doing those analysis. But anyways, let's start it. Okay, welcome everyone. Welcome. I see a lot of new names here on the participants list. Lawrence, of course, top one, always here. Same as Steve, same as Sad, same as a lot of people. So for those who are new, welcome. What we basically do is we go through all the charts. So sorry, all the currencies from JPY, New Zealand dollar, you know, pound, CAD, USD, euro, and then we go from through the analysis that I've done last week. What did work out? What didn't work out? What was the reason why I did it? What was the reason why it did not work out? And then we go through the new week ahead. All right, let's dive into last week. You know, I mentioned for you guys, where is US dollar? I mentioned to you guys that we would have a target at 105. We did hit that 105, and I mentioned as well that we would be around you know, that level here, 105.5. My new target is 106 now. Am I just doing 105, 106, 107, 108? Yes, that's what I'm doing. Why? Because if you know, if we can see one more week, this week is very important. All right, this week is the week is like, it's the top week. Let me open here the economic calendar so you guys will know why is the top one top week ahead, because we do have a lot of I mean, a lot of important news to the market. We're going to have, let me share this screen here, just a second. There we go. So today, actually this week, this is FinLogix, right? So if you guys want to use it, it's free. Just type finlogix.com, then go to calendar, economic calendar. It's a sister company from ACY Securities. But anyways, all right, let's go. So Monday, yesterday, we had very few news. We didn't have much, you know, pretty much standard. But today we do have a few interesting news. We did had 11:30 the RBA minutes. Pretty not that good for Australian dollar. And then soon we're gonna have the CPI for the Europe. Right, so this is going to be very important at 7 o'clock. So maybe we can go a little bit like 7:10, 7:15, 7:50. So we can see the release of it, and we can actually have a look on what's going to happen on Euro. Okay, so if you guys want to stay after 7, I would lovely appreciate that, so we can analyze this news on real time. And then we're going to have, I'm not going to stay until 10:30, but we're going to have 10:30, we're going to have CPI for Canada as well. And then tomorrow, this is Australia time, okay? So Wednesday would be tomorrow for us. We're going to have the Japan balance of trade, very important as well. And then what else? Oh, yeah, of course, the inflation rate for the UK. Very, very important. So we are actually, I was actually talking about inflation on UK today on a YouTube video. So if you guys go to our channel, just a moment. I've just done it. Oh, here, this one. I've just done a video, what to expect from the boy this Thursday. Will the boy allow the GDP to lose even more ground? So are we expecting, you know, the GDP to lose more ground, or it will be something that the market will react as positive? Because we are expecting an increase on the inflation, right? So if the inflation is increasing, then oh, you watch it, that's good. Oh, welcome, Noel, welcome. So if the inflation keeps going up, then the boy, the Bank of Europe, Bank of Europe will have to increase the rates. So if they have to increase the rates, then the currency will be stronger, right? So we have to watch it very close. I do think, in my personal opinion, that we can go, I already gave you guys my target on Gbpusd here. That was 123. All right, so that's my target on the Gbpusd. I'm expecting like from now on, right, from here to here, a very, very bearish momentum. Okay, so I would, in my opinion, that's my personal take, I have to say that, you guys know, if the market comes back somewhere around here, I would be shorting, in my opinion. That's my personal trade. Why is that? Because if inflation comes higher than expected, yes, the market will do a, what's my tool here? No, not this one here. So if the market comes like, if the inflation comes higher than expected, the market will go up. It will go up because inflation is high. Then the market will think, oh, damn, they will have to raise rates, right? So then the market will go up somewhere around this area. Once the market is there, we're going to have the interest rate decision. So if they have a approach to the monetary policy more bearish, saying that this may be the last raise that they will do, or saying like we need more data to take approaches towards the interest rates, then the market will collapse, right? So it will basically be like good pullbacks. You know, any good pullbacks here would be very, very good. Okay, So let me take this off. There we go. So coming back here to economic calendar. And so just pay attention on that. What else we have? We do have a few more things. Very, very important. Right. So on Thursday, 21st of September at 4 a.m., right? So this is Sydney time at 4 a.m. We will have the interest rate decision from the Fed. Everyone, well, most of the market is expecting a pause from the Fed, as they were expecting last time. Look, to be quite honest with you guys, I'm not too keen on a pause. I do think that they will raise rates. Okay, I think they will raise rates, and I will mention that after when we go to the analysis. But anyways, so this is very important as well. Pay attention on that. And if they don't raise rates on here, right, so it won't be taken as bearish for the US dollar. Okay, it will be taken as neutral. Why? Because just after that, we're going to have the economic projections. The economic projections will be more important than the interest rate decision if they pause. If they pause, so I'm going to say it again in another rewording. If they pause, the economic projections will be more important than the interest rate decision. Right? Why? Because if they pause, it is as expected, done. If the economic projections come, then it will be important to know what will be the forward guidance. What I mean by forward guidance, what are them expecting for, you know, maybe the last quarter of 2023, first quarter of 2024, so on, so on. Okay, so we need to know what they are expecting on that, so we can take a trade based on the interest rate decision. So that will be something very important to know. Okay. The forecast for November is 50-50 at the moment for the market. So data will be watched closely. That's correct, Lawrence. That's I was looking at the market is already sort of, you know, expecting but not expecting as well. So it's very 50-50 at the moment. And we need to pay attention on here, but as well on this big boy here. Okay. Going down on Thursday, we're going to have the interest rate decision for the UK. Well, this one is pretty much very simple. Like, watch the video that we've published it on our channel. Let me send this link there. Yeah, you guys can watch it. Where's my mouse here? So watch that video and you will know why they're expecting this, especially if inflation comes higher than expected. If the CPI comes at 7, actually, it's, you know, or even higher than 7. But anyways, okay, so pretty chill one here, not much to talk about. I think that will raise 25 basis points. There is reasons why they will. And Friday we do have inflation rate for 9:30 inflation rate for Japan. All right, so very important. I don't think it will change. We'll maintain the same. As well, the interest rate decision, it will maintain the same. All right, so again, it's very annoying talking about the same thing, but I think you guys already tired it to know that Japanese yen it's not a long, just because there's, you know, there's no reason behind it fundamentally to keep longing Japanese yen. That's my opinion. In my opinion, okay, in my opinion, that would be my take. So if you know, we need more inflation, we need much more inflation on here, so then they can raise interest rates decision. So the interest rate. But look, there's a lot of things to do here yet, but they're not ready for it. All right, and then we have retail sales, very important as well. So if we come higher, you know, higher on after like, sorry, off the negative. So let's say if it comes 0.5%, then we're going to have to watch closely to Gbpjpy, because in the economy over there is heating up and they will continue to raise interest rates. Okay, And then what else? Manufacturing PMIs. And then that's it. We do have a few compost and global services PMI for 11:45 on Friday for US. But yeah, guys, that would be the most important ones, okay? And I've covered it this as well on YouTube channel. But let's go for what everyone is here for. Right, 17 people. That's lovely to see. Very, very good, guys. Okay, so let's go. Japanese yen first. Let me take a pen. So I don't know if you guys have watched the video. I've published it on the YouTube channel yesterday, talking about the Japanese yen. But let me grab Usdjpy. But I did, I've mentioned already multiple times, there's imbalancing on that position area, which you have taken. Will it be a short to that area? We'll talk about that later, mate. Just me positioning this line 148. 148. Okay, there we go. Okay, so 148 would be my first target. I've already mentioned this multiple times for you guys. I keep believing that the JPY is a very weak currency at the moment. US dollar have been gaining in strength since 9 weeks ago, so we can expect even further up moves for Usdjpy, especially now. If we look at the 1 hour time frame, let me zoom in here, like that. Where is the box? Oh no, where is that box? Just a moment. Okay, so especially now, if we look at here, we are actually consolidating, right? I do expect a up move, you know, a few more touchdowns somewhere around here, and then a up move towards the 148.5 area. Right, so somewhere around here, maybe during this week, right? Because this week it's very important week. So if the Fed raises interest rate, let's say, or if they keep a hawkish forward guidance, as I mentioned for you guys, then definitely we can see this Usdjpy skyrocketing even more. Okay, and then my last target is at 150. Okay, that would be my last target. And you know what I find interesting, because I'm not saying that I'm like the top G guy here, but I actually do what I say. So I think that's a big take, because when I was watching a few videos on YouTube, like people say a lot, they talk, but they don't do what they say. So you can actually see like I'm taking a position on what I'm actually saying for you guys, you know, so that's one point to consider. Anyways, so the JPY is still one of the weakest currency on the G10 group. Okay, so out of New Zealand dollar, Australian dollar, CHF, pound, euro, this JPY is the weakest currency. And this is just because the dovish monetary policy held by the BOJ, the Bank of Japan. And, you know, despite all the rumors that they are trying to spread the control, the damage, you know, of these negative interest rate decisions, that there's no much changes for them to do right now, because they need much more data, they need higher inflation, they need higher figures, so then they can try to get off from this negative monetary policy. Until there, the Japanese yen will be considered the weakest. All right, so there's no reason why, as an investor, I would put money there, right? Because it would be lovely for me to take money from Japan because it's on a negative interest rate, but it wouldn't be it's smarter for me to buy Japanese yen, right? So I just take Japanese yen and invest in another country, let's say US dollar, let's say, sorry, USA or Brazil or an emerging market, right? Philippines and maybe Australia and so on. So we're going to have this Friday, as I've just mentioned, the monetary policy update from the BOJ. And obviously, I'm not expecting any change there, but you know, the forward guidance will be the interesting part, especially if the weather plays with the market once again by like teasing, you know, some potential moves. But quite over, not much to talk about here. I'm talking every week the same thing. But yeah, bearish on Japanese yen. Okay. So if I would trade Japanese yen long, I would definitely look for Usdjpy. I would look as well for Audjpy. That's the trade I've just taken this morning. I think it was this morning, yeah. But this one is a day trader, right? So that's my target and that's it. But yeah, so the reason why I took this trade was that I know that the Australian dollar is weaker. I know that. But compare it to the Japanese yen is, you know, it's strong. So compare it like to AUD and US dollar. Yes, of course, AUD is the weakest currency. But AUD and JPY, AUD is the strongest currency and JPY is the weakest currency. So if we look here, the box is here again, you know, I got the opportunity to long on half of the box, right? So that's what I explained on the video. So I got the opportunity to long half on the box, right? Half of the accumulation, and then it played around a bit. I didn't want to put another position here because I had already 1% of my account on this level. So I just waited and then went to run and, you know, done my day to life things. And I came back now, didn't even look to the charts today pretty much. And it's nearly TP. So that's it. That's a pretty good Monday. Tuesday. Nzdjpy, I would long as well. Where is it? It's not here. That's a problem. Yeah, I would long Nzdjpy as well. Right, so we are in that box, but you know, it is a very, very big box. Very range bounding at the moment. We can see that the moves that, you know, Nzdjpy is doing, because both of them are very weak currencies, but New Zealand dollar is stronger than JPY at the moment. So JPY is the weakest currency in total. I would long it. You know, there's no reason why I wouldn't. But I would prefer to allocate my portfolio towards all the assets classes like CHF JPY and as well USDJPY and AUDJPY. That would be my three preferable ones for if you want a long, if you want a short JPY. Okay. Now moving on. Time is it? So moving on, let's talk about the New Zealand dollar. ZUSD, where are you? Here. Okay, so it has been pretty resilient. Okay, it has been pretty resilient on a very low sort of, you know, we did have this very big down push here, and then right now we are just actually, you know, on the not moving much. So maybe what we can expect a bit of more, you know, up move on here somewhere around this level, and then coming back slowly again. Okay. But anyways, so the New Zealand dollar is managing to slow down its descent into hell at the moment, I would say. But the data isn't great. All right, doesn't mean that the New Zealand dollar is strengthening. And the economy is contracting a lot as well. But the fact is that the China and Australia is performing better. You know, it's sort of helping the economy to survive a little longer, I would say, right? So I've mentioned already for you guys, where is my pie? Just a moment. I hate Windows 11. Yeah. Okay, so what I've mentioned for you guys is that we do have, let's say blue. We have like Australia here, right? We have New Zealand here, and we have China, right? So China, and we have Japan, right? So what does this draw of a 5 years old represents? Represents that they are all partners. It like Australia is needing something. Yeah, no worries. New Zealand, Japan, and China will help you, right? But China is actually not that big as it was. It is bigger, you know, it is very big. There is a lot of things going on, but in the past, let's say 2 to 3 weeks, I would say, they've been contracting a bit, especially on the real estate market. A lot of business have been bankrupt. Okay, so meaning that they are not quite happy at the moment, and it was impacting much more the New Zealand dollar in the past 2 to 3 weeks. Is, you know, and if we look here on the charts, is exactly what I've been saying the past 2 to 3 weeks, maybe a bit more. But anyways, so the whole last month, August here, all the way to 31st, we did a -3% on NZD/USD, because China wasn't performing well, Australia wasn't performing well, Australia was in a dovish monetary policy, inflation was coming down, you know, and then New Zealand had the disaster there on the north of the island. So there was a lot of things coming up with that. So this is why the momentum was so strong to downtrend. But, you know, now the China and Australia are performing a bit better. I'm not saying they're performing like strongly better and that the New Zealand will fly. No, nothing around that. It's performing a little bit better, sound a really bit more resilient than it was before, and it's helping the economy to survive. Okay, less demand for the commodities as well. That's a good take as well, Sasquatch. I will talk about Eurodollar afterwards, mate. I don't want to sound rude. I just, you know, we sort of go for everything. But anyways, and so yeah, as I was saying, so, you know, China and Australia performing a little bit better, so then they can survive a little longer. There's no doubt about the New Zealand being a downtrend, right? So, and there is no doubt about the downtrend being about to continue for some time. All right, that's the thing. That's what I'm saying. Doesn't explain. It doesn't mean, sorry, that they are consolidating. This is the moment. This is the moment I've been, you know, talking so many times. Look at this. All right, let me grab my thing here again. Here. So look at this. It's consolidation. What does that mean? It means that we are accumulating for continue a downtrend, right? A downtrend. So I do have some data. I don't know if I can show that, but I will talk to the guys, and hopefully I can share those data with you guys. But what I do is I basically take seasonal approach towards a few currencies as well, and in the next maybe month and a half, we're going to have a very strong downtrend on the New Zealand dollar. So the seasonality for the New Zealand dollar, only the New Zealand dollar, I'm not talking about NZD/USD, I'm talking about New Zealand dollar, it will be very weak. Okay, so we can expect this downtrend to continue on the New Zealand dollar. Oh, look, it's taking so many time. Yes, it is taking so many time because there's nothing happening. You know, the market needs to move when something happens. It doesn't mean that the market won't move when, you know, oh, there are birds flying. No, nothing like that. So we just keep calm and the market will do the thing. All right. Let me grab a bit of water. I'm a bit stressed now. Anyways, so very bearish for me. I think You guys can note that. Very bearish on the New Zealand dollar. But, you know, doesn't mean that we are stagnated at this point, that we're going to go for a uptrend. And guys, don't try to catch, all right? I mean, you can try, but, you know, don't try to catch those little moves. You know, try to ride the move, okay? Try to ride the wave. This is a pullback. We don't need to trade pullbacks, all right? You can trade pullbacks, definitely you can, but this is a risk that we're going to take, right? Because the trend is down. So if you want to trade down, if you want to trade, against the trend, you know, the risk that you will be taking for your portfolio will be much higher than if you just place a sell position somewhere here, right? If you place a short position somewhere here or there or even here, the trend is down. New Zealand is weak, and that's it. That's it. All right. Just continue that, you know, there's no doubt that I think the downtrend will continue, and there's no doubt that the downtrend will be about to continue for longer. Okay. Next week, you know, this week will be very low in data for the New Zealand. We just expect GDP for New Zealand, and that's it. But as long as China is recovering and the commodity currencies are performing, we may see the New Zealand dollar retrace more and more. But however, I'm still looking to short the currency if we reach good technical areas that I was just mentioned for you guys now. All right, so this area, even somewhere here. Okay. New Zealand dollar, I would look to short. I would look, okay, just let me do something here. I wouldn't look to short New Zealand dollar against CHF anymore. Okay. I was looking to short New Zealand dollar CHF last week. I was, yes, I do. I'm not perfect, but I'm not looking anymore. Why? Because CHF is not a big partner with China, and New Zealand is a big partner with China. So China is doing pretty well. Well, not that well, but you know, it's doing better than expected now. So New Zealand dollar is actually getting the wave in. And CHF is just, you know, licking the fingers, looking at New Zealand dollar flying and then going down as the safe haven currency. How is that possible? So I may be looking to, you know, leave this one on the side. But if you guys, you know, want to trade on long positions here, you know, make your own analysis, make your own strategy, and yeah, go for it. I would only look for New Zealand dollar, to be honest. You know, short positions here would be likely more, I would say, how can I say that? Would be more likely interesting, like more interesting to be taken, and the risk, it's much more the delta, the exposure of your portfolio would be better. Okay. What else? New Zealand dollar, Nzdusd, yeah, only Nzdusd. Right, let's go for AUD. I do have a few positions on AUD, so Audcad, Audjpy, and that would be it. And Audusd. That trade was good. This one was nice. Yeah. But anyways, so now what are we looking for AUD? Let's talk about AUDUSD. So it seems like the market, you know, slowly evolving now for Australia. What I mean by that? Well, not too long ago, the main driver of the market was to know which central bank was going to hike next, right? We did have like a fight towards Fed, towards ECB, and who else was on the fight? The BOE as well, the Bank of Europe, and Australia. So let me take a sip of water, guys. So they're like, oh, who's gonna hike next? I don't want to hike next. Oh, I do then. So it was like that. So you know, now that every economy are picking or have passed it, it picks. What I mean by pick, right? What I mean by that is, let me show you guys how can I do this. Just a moment. Let me open here. Where is the image? I want this one here. Okay, let me download it and put it on here. There we go. Okay, so if we open this image here, really hate Windows 11, but that's fine. Yeah, boy. Okay, so the peak rate is when the central bank is at the maximum that they can for hiking the interest rates, right? Can I draw on here? Oh, I can. That's good. Okay, so this is the Bank of Europe. Okay, so we have the rates here. So we have the current expectation and a week ago expectation. So the green line, I know it's, you know, it's pretty bad to see now on the zoom in, but if you guys come closer to the screen, you can see it. So if we see it, the actual current is involving a bit more. Right? So we have a bit of a difference on here. So we are expecting 5.56 now on the peak rate and not more 5.55. Is that a big deal? No, it's not a big deal. It's just the market sentiment. Okay. But what I want to show you is that this is the peak, right? So the peak for the boy would be 5.5. Right, so 5.5% interest rates. So 5.5 ER would be the peak rate for the boy. Okay. So then after that, after they reach the peak, you know, the peak is expected to reach at February 1st, 2024. Okay, so they're expecting to hit the peak next year, but until 14th of December, they expect to still have a 550 and then pause. Okay, so we are here now. Okay, so we are here now. So then we're gonna raise to 5.5. So you're gonna be here. Okay. So then they're gonna raise, they're gonna keep pausing and then keep pausing again. Okay, so once they are on here, then that's it. Then we may be looking to long the pound on next year, but not this year. All right, so this is why, to long the pound on here. So we need to check then what the other currencies will be doing. Okay, so this is pretty much, I don't have the chart for the RBA, so this is why I've used it, the boy one. But yeah, anyway, so that what I just want to you guys know that this is the peak. It's when the central bank is not expecting to raise the rates anymore. Okay, let's come back to the chart. How can I take all of this off? Okay, done. Okay, so AUD, continue. So, you know, now that every economy, it's, you know, all the central banks are sort of at the peak rate, the term is actually evolving, and we are switching more to knowing who is going to resist the higher interest rates better. So now that we are sort of approaching that peak on all the central banks, we need to know who will maintain it for longer, who will maintain at 5.5 for longer, who will maintain at 4.20 for longer. Who's going to be the little one that will cut the rates first? That guy, the one that will, you know, bring the rates down first, well, that will be a huge problem for them. It will be huge problem for them. Why? Because they keep, you know, all the other countries, all the other economies keep the rate up. So then if they're cutting the rate, no one will want that currency. So it will be very big short opportunities. Anyway, we are very early on this stage. So on like this transition, I would say, you know, but it's slowly happening. So we need to keep your eyes. Like there are a lot of proofs that this is happening. Like for instance, like the GDP is going down even with a higher wage reading. You know, we do have a few good we do have a few good readings from the UK, but even like that, the GBP is going down. The euro going down with an increase in interest rates. You know, we did have an increase on Europe interest rates, but the forward guidance was dovish, so they keep going down. And the AUD doing great despite having a pause recently. So, you know, we did have a pause, blah, 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 but now it's all good. So the market's pretty, you know, you go and do economics uni, but then you come here like, oh my God, it's all happening like different what they told me. So very complex market at the moment. But anyways, the latest labor market data were really good for Australia, you know, helping a few investors to picture, I would say, the Australia being capable of a soft landing, and you know, with higher interest rates a bit for longer. Inflation in Australia is decreasing. The rates are not that high compared to most other countries. And on top of that, you know, we still find strength within the data, and China seems on the road to recovery, I would say. So it's a very mixed, very complex what's happening in Australia. And it just shows us that the Australian dollar may be a very good currency to bet on for the weeks and months to come. So my buy is pretty neutral. Sort of changing to a bullish view of Australian dollar. I do have a few friends that are maintain contact, talking, working at Goldman Sachs, JP Morgan, and so on. And they've recently shared with me that they would be looking at 168 for next year on Australian dollar. So if we look at 168, that's going to be a very nice trade. But once the times come, I'll let you guys know. Okay, so that would be the trade. That would be a very nice trade. Is it the time for positioning? Not too sure. Okay, we do have a box here. If the data keeps coming good, if it is an area of a value, definitely. If the data keeps coming good, if the RBA continues to pause, but not cut, okay, and China continues to be resilient on the economy, continues to be on the road to recovery, as I've just mentioned, I would be looking to take longs on AUD, okay? But anyways, right now, I'm more like neutral, I would say, to bullish, okay? So if I want to trade AUD, I would trade AUD USD, that's it. I would trade AUD USD, definitely AUD JPY on long, you know, even like, I don't like to, you know, I hate to do that, but like, I don't want to already like move my take profits up, like, oh my God, like here. No, that's it. I established my take profit. That's it. That's my day trade for today. I take a very, very few day trades. I like may take you 1 or 2 per month. So like nothing too big. But yeah, this one would definitely be a nice long position as well. And what else? Audcad, nope, wouldn't be nice to long here. Yeah, Audjpy and AUD/USD when the time comes would be the best opportunities. Okay, let's move on for CHF. Okay, so 1 hour. I've mentioned last week that I would be looking for, I don't know if you guys remember, probably do, because you guys remember everything. I can take this. Yeah, Okay. So I've mentioned for you guys that I would be looking for CHF JPY come back to this area. So then I would look how the price action would go and take my decisions to long it or not. Look, we are, as I've just mentioned, CHF, it's not on my favorite currency, okay, at the moment, as it was like 3 weeks ago when I mentioned for you guys this up move here and so on. Sorry, 4 weeks ago, yeah, on the first webinar. But indeed, we still have these this box being accumulated here. I just wouldn't. Yeah. Anyways, let's go first for the analysis. So Swiss has been slowing down recently. I've been noting these. Okay. Still a safe haven, of course. You know, still it will always be a safe haven. It's not like a currency that will lose this status. But the fact that the US economy is doing so great, so well, is stealing the show, I would say. Okay, so it's like, okay, so CHF good, but look at US. US is doing fantastically well. I'm gonna put my money there instead of Swissy. Okay. So most investors, you know, who are looking to earn money right now, they're preferring the dollar compared to the CHF because of the higher yield that they gain on it. That's the thing. So this week we're gonna have the monetary policy update from the SNB, the Swiss National Bank. The consensus expects a 25 basis point hike. That could help the currency regain some interest again, you know, amid the investors. But whenever the US dollar starts to slow down, the CHF will most probably become the #1 safe haven of choice again. So I still very good long. It's still a very good long against the weaker currencies. But I would definitely, you know, be careful with CHF. Just watch out with US dollar. And as we can see, US dollar have been pretty strong since July. Okay, so CHF as well have been pretty strong since March. January, February, March. Yeah, January, February, March. So have been stronger since then. But in my opinion, yes, we can still go higher. All right. So, but just watch out for that. Euro CHF, nothing too interesting here. Okay. In my opinion, I'm more, I would say, like towards CHF neutral to bullish. Okay, same as the Australian dollar. So just watch out US dollar and the data from CHF. So you know, I wouldn't say anything for you guys more than that. All right, next one. Let's talk about euro. Let's talk about the big boys: euro, pound, US dollar. Okay, so who wanted me to talk about the euro? Tao wants me to talk about the euro dollar. That's it, man. That's the time. The time that everyone is expecting always. Right? Talk about euro dollar. Oh, Steve have a question. Sorry, Steve. Hi, Luca. Enjoy the relaxes I have last Friday YouTube upload. Oh, hey, oh, thanks, Steve. Yeah, we were just trying out a new. Steve just messaged me saying that he enjoyed the last video that we posted on Friday. That was a very different aspect, you know, like starting in the office, you know, and going throughout the streets and so on. So thanks for that, Steve. Anyway, so coming back for euro dollar. Okay, so let me already put it up here. I think if you guys have been for like since first webinar with me, you already know my view on euro. Just a moment. Okay, done. Yeah, my view on Euro is short. Pretty simple, right? Not much to see here, not much to talk here. We are having a pullback, right? So oopsie, 1 hour. Oh, it was already 1 hour. So we are having a pullback towards this area. Where is it? Yeah, towards this area. Okay, so maybe somewhere on here, or maybe here, and then we are coming back. Okay, so I've just wrote it down on a blog today talking about Europe. If you guys want to have a look later on after the webinar, you can have a look, but it's very interesting. Okay, just a moment, let's go. We're gonna have where is it? Let me take it off. 7 o'clock. Let me open up here. Quick. I'm going to use economic calendar from investing.com. Just a moment. Where is it? Come here. Okay. If my computer helps, that would be good. Okay, let's see. Okay, we're expecting now, we're waiting now for CPI, year over year, month over month. Let's see how it will comes for Euro. Okay, can I do that? I can. That's good. Okay. Let's put like in 50 minutes. There we go. Let's see how the spreads are. Spreads are getting tighter and tighter. Sorry, wider and wider. 1 minute. $7.5. And there we go. Let's see. Okay, bit of move. Jesus, that minute is longer than I was expecting. Okay. What time is it? Oh, there's still 1 minute. Oh my God. Okay. My computer is on the wrong time then. Anyway, so let's see what we're going to have here. That will be very interesting. I'm expecting a higher than expected. So Euro dollar will go up. But please don't trade those news. They're very high impacted news. Oh, there we go. Lower than expected. That's good. Okay, so what we have here is month over month, expectation was at 0.6%. Okay, last month it was negative 0.1%. So that means that we were expecting negative, last month it was negative 0.1%. And then we had an increase of forecast for this month at 0.6. It didn't came 0.6, it came 0.5. But indeed, it's more than last month. Okay, so it's still bullish for Europe. And same on here. Sorry, not same on here. Not same. 5.3%. Okay, last year. They were expecting that inflation continues to be the same. And then it came 5.2. So very mixed data. Okay, we may have a bit of a down move and an up move again. Oopsie, sorry. We're gonna have a down move and an up move again. Probably that would be the take. But yeah, nothing out of the lines. Cool. Okay, let's go for Euro analysis. So Euro have an interesting week, monetary policy this week. So let me. Just a note here that this is how you analyze. You don't trade it. You don't trade a news. That's it. You see the numbers, you wait for the numbers, and now you know what to do during the week. You're not going to be here like that, right? Ah, buy, sell, sell, buy, sell. Oh my God. There we go. No, don't do that. This is unprofessional. Okay. We need to wait the data, let the data come first, and then during the week, we decide what to do with that data. And that's it. Okay. Anyways, so the euro is going to have a very interesting week with the monetary policy, you know, from the ECB. Most analysts expecting a pause in the market as well, so 50-50. But we had a surprise, 25 basis point last time. We wasn't surprised, me and you guys, because I've mentioned that why they would raise 25 basis point. But anyways, in most cases, an increase in interest rates is bullish, you know, as the yield offered on the currency is higher, and as it implies that the economy is still developing. But we saw over a bearish reaction after the announcement last week, and the reason are really simple. Because the European economy is getting weaker by the day, as we saw with terrible data results. Okay, so this new hike that they done, even if it was a sort of surprise for the market, is seen as more pressure added to an already bad looking economy. Okay, we've witnessed as well the same phenomenon when the Bank of England did a surprise 50 basis point hike a few months ago. And on top of that, the statement and the forward guidance provided by Christine Lagarde were very very dovish. And then we had the confirmation of diverging of opinions within the central bankers, you know, as the fact that a pause is most likely for this coming week. My bias would be more neutral to bearish on the euro, and you know, will only change if the next sample of data makes me think otherwise. So pretty bearish still, and I do think that we can come higher here. Okay, maybe do something like that towards this area. I would be looking to short it. Okay, and then continue to go down. My targets are at 105.8 and then 105. If we breach the 106, then that's it. 105 would be the way. Okay, I've just mentioned that today. Okay, just mentioned that today on my blog that we've posted. Anyways, so euro dollar would be a good short. What else? Euro. Let me see my Nzdjpy position. Okay, it's still going. Euro CHF, not looking. Yeah, euro dollar would be the one. Let's take for the major. Again, neutral to bearish. Okay, on euro. Now let's go for Gbp. Gbp here. The pound also had an interesting week. You know, unemployment showed a mixed results. Wages are going up, and the gross domestic product is terribly weakening. The reaction over from all of these data was bearish, as we can see here, you know, last week. Indeed, you know, higher wages are usually seen as a good sign. But at the moment, it implies that inflation will be sustained. So if higher wages are to come, then higher inflation is to stay. As we know it, you know, high inflation means higher interest rate, as I've just mentioned for you guys. And that means damage to the economy. So, you know, because the rest of the economy markers like the GDP are largely decreasing, the UK is facing a very tough situation at the moment. They're suffering from both high inflation and high interest rates. So this is why it's very hard to not, you know, short Gbp at the moment. And you know, I think they will keep like that for some time. And my bias still keeps saying, yeah, for Gbp for a long time already. It's really coming alive the moment that I think that this short position will be very big, and I think it's very, very close to what I'm expecting, a huge decline on GBP. So yes, I'm very bearish, very, very bearish on the pound, and I'm expecting a drop somewhere around those areas 123. I would love to see a big a sort of a pullback somewhere here. I would love to. I would short it, but yeah, that's the box, and we are sort of moving towards this area. Okay. GBP USD, Gbpjpy. Where's Gbpjpy? Not here. Oopsie. I do have it here. I don't. Okay. Not a problem. We just add it here. Okay, so Gbpjpy, even as the JPY is very weak at the moment, you know, GBP seems weaker than JPY, as the same as I was just talking about here, but Australian dollar is stronger than JPY. But on this case, JPY is stronger than the pound. So we may be looking towards an area of, if we break this, only if we break this, we may be looking towards here. But otherwise, if the UK raises rates as widely expected, then we may be looking to an uptrend. Okay, but I would stick for GBPUSD, guys. That would be the clearer view on the pound to short it. Okay, so towards 123. Again, bearish on pound. Let's talk about CAD. I have a friend that he's long on Usdcad. God bless him. Canadian dollar is slowly gaining the strength back, and this is why I'm short on Audcad. Right, I'm not dumb. Slowly gaining back strength because of different factors, right? So the first one is that the recovery of China. There's a huge influence on the Canada as well, which automatically brings up an oil prices, which there is a big, you know, confluence with Canadian dollars and Canada in Canada economy, that it's very big on oil. And the second factor is that the strength of the US economy, one of the biggest trading partner, is also supports the country. So basically, it's very funny to see that, because US dollar is very strong, but then they are partners. So the CAD is high. It's basically just stronger than US dollar because China and the oil prices. So it's gaining by two factors. So this is why we're having this down move, since the prices, the oil prices is too, we're going up. I can prove to you guys. What's our tick on oil? I don't know. Do you guys know what's the tick on oil? I'm not a commodity trader. I'm gonna find out soon. Wait a minute. Done. Let's go for both of them. Okay, so UK Brent and USTI. Done. Okay, so let's go here with Usdcad. I just want to show you guys the confluence. Would be better if I can use TradingView, but it's fine. We can do it here. So let me do Alt R now. Audcad. Nope. Okay, okay. So I just want those three here. So what I want to show you guys is the confluence between Usdcad and the confluence between the oil prices. Okay, so if we just, I know it doesn't look the best, but bear with me, guys. So on here, that was 2023. Look at the date down here, 2023, when the CAD started to gain in strength, was September 7, right? So if we look at here, September 7 were when the prices of oil started to raise. Okay, so if we put a line exactly here, when the prices start to raise, CAD started to gain strength, same as on here, pretty much the same. That doesn't change much, but anyways, just want to put it so you guys can see it. Yeah, let me do something like that. Okay, so we can see that, yes, they have a big confluence. So it's going down here, it's going up here, right? So it's basically inverted. But anyways, so yeah, there is a big confluence here, and the first big take would be this one, and the second one would be that the US dollar is not stronger as the CAD, but it is supporting the country. And last but not least, I love to say that, the interest rates are currently around 5%, which is an interesting yield for investors, right? Especially now since we have several elements supporting the CAD. And you know, I'm turning more neutral for now, okay? And we rely on data, oil prices, the strength of the US economy, the strength of China, and those types of things. So I'm more like neutral here. I don't want to say that I'm bullish, okay, but I'm more neutral. I need a bit of more data. So then, yes, if we need to ride this downtrend, would be nice, right? Would be very good. But I need more data for you. And I don't want to put, like, I don't want to lie for you guys. Oh, let's do this or let's do that if I don't have what to say. So yeah, let's wait for a few more datas, and definitely we can have a good trade on CAD. And for last, US dollar. Let's have a look how euro dollar is performing. Yeah, bit of down move, up move. Yeah, not going anywhere. Let's talk about US dollar. Well, let's go Usdjpy maybe. Yeah, let's talk about. Okay. Sorry. Here. And the 9th week in a row of extremely bullish price action for the US dollar. Okay. The big players have been pricing the accumulation of strong data, and the fact that rate cuts are really off the table for now. So that's what I've been mentioning for you guys. The US dollar is going strong, and nothing seems to be able to stop it soon. Okay, so until we start to have some weak data coming from there, there's no reason to turn bearish on the US dollar. The dollar index, as we can see, it's now sitting under a major level around the 105. So yeah, big support area, I would say. And it looks like the bullish USD scenario have been fully priced in. It's still extremely data dependent. And we're going to have, as I've mentioned, the FOMC meeting, and where most of the institutions expect to pause. This event shouldn't change the current positive outlook, as we are witnessing. And then, you know, bullish on the dollar until the data says anything otherwise. That, yeah, just bullish on dollar. Bullish on dollar, shorting euro dollar, shorting longing Usdjpy, shorting pound dollar. Yeah, definitely bullish on the US dollar. Okay, and what are the next target we expecting? 106. And that's it for me for today, guys. So let's do a wrap up. So basically we have, oopsie, my pen is not working. That's not good. Wait a minute. There we go. Okay. So JPY short, New Zealand dollar bearish, AUD neutral to bullish, CHF neutral to bullish, Euro bearish, Pound bearish, CAD neutral, and US dollar bullish all the way up until 106. All right, guys, so that's it for today. We went much more than 1 hour. We'd actually done 1 hour and 20. Thanks for that, Lawrence. Thanks for that, man. Thanks. And yeah, I'm going to talk to my team, as I've mentioned in the beginning of that. And then maybe we do a macroeconomics course for you guys. That's going to be cool. I'd like to do that. All good. Have a great day. Have a great night. Have a great evening, guys. Thanks, guys. Thanks so much. I love to be here. I love to talk to everyone. If anyone have a question, please just message down. And then I'm gonna finish in 1 minute if no one have a question. Awesome. All right. Yeah, I will talk to them. I will talk to them, so no worries. Keep liking the videos, keep showing us some good stuff. All right, guys, so I'm gonna finish for now. Thanks again for everyone. Thanks again for the cooperation, for everything that you guys are doing. I just love to be here, you know, seeing 17, 18, 20 people. It's very nice. All right, guys, see you next week. And how do you find on YouTube? You can just type ACY Securities, right? So ACY Securities, YouTube. That's it. All right, done and dusted. All right, guys, see you next week. Bye-bye.
All right, guys, have a wonderful week and keep an eye on everything. All right, keep an eye on everything. You're welcome, Steve. Thank you so much. Yeah, very nice to have you guys here. Very nice. All right, guys, have a good night, and I see you next Tuesday. Bye-bye.